Hello and welcome to the Mining Show, brought to you by Blytheway on Core Finance. I'm Charlie Gibson. Now, as everybody knows, diamonds are forever, and that is because they're the hardest substance in the world. Well, they used to be the hardest substance in the world. There are a couple of vulgar synthetic substances which are now harder, but if it's not the hardest naturally occurring substance anymore, then, well, arguably it is in terms of finance and also in terms of exploration. One of the hardest things in the world to find and then to finance. Well, one of the companies which is making great strides in this respect is Stellar Diamonds, and joining me now is the Chief Executive Officer of Stellar, Karl Smithson. Karl, thank you very much indeed for joining us. And you're just back from Sierra Leone, where your lead project is located. You're in the process of raising, what, £500,000?
Mm-hmm. Yep.
Tell us about it.
Yeah, well, we actually raised 300 already, and we've opened an open office for 200,000 to minority shareholders, so they also get the opportunity to invest at this level. And those funds primarily are going to be used for well, a bit of working capital, of course, but what we intend to do is pay the Tongo environmental license, having finished the EIA, and that will then trigger the release, or the issuing rather, of the mining license for Tongo, which is a key step in the project development.
Okay, so this is all part of a sort of staged, planned development process. Where do we go from here?
Well, there's a small matter of a large amount of money to raise for the total project development. That's in the region of about $40 million, a bit more with working capital. We've progressed that. We haven't really alluded to it in any announcements, but we are engaged with the group that is looking at assisting us with that, and probably another couple of months in the making, I would say, but we're making pretty good progress towards being able to fully fund this operation.
Okay, and then from the moment when you're fully funded, then what are the timelines that investors can expect to see?
Yeah, the great thing about Tongo is it's quick into production. There's a processing plant already in country which comes as part of the deal that we've done with Octane Mining, and to relocate that to site is a fairly easy task. So really what would happen from day one of the funding is that we complete probably a 4-month what we call front-end engineering design, which basically refines the mine plan that we have, gets all the capex and opex sort of nailed down with a lot more confidence than currently, and basically that then sort of leads into the project execution. But whilst all that sort of nice stuff's going on, we're doing some mine development drilling, because we are going underground from day one. And you're obviously sinking tunnels, which is an expensive business. You want to make sure that they're pointing in the right direction, in layman's terms. So there's a bit of drilling that we'll do on the top 2 levels of mining to steer the underground decline development in the first 2 years. And in addition to that, it's basically relocating that plant, upgrading it, and having it ready for the first ore to come out of the decline. So production within 12 months, and a steady ramp up to what we call optimum production levels at the end of year 3 of 200,000 carats per year. So that's the mine plan as it stands.
So if all goes to plan, you'll be financed, say, by the end of the year. Mm-hmm. You would be mining first ore by the end of 2018?
Yeah, literally within 12 months of cash, you're doing your first diamond sale. The first diamonds, if we want to be specific, come out after about 9 months, I think. We could probably accelerate that a little bit because there's a stockpile there, which we can cheat a little bit to get some diamonds if we so chose to. But no, I mean, the declines sink fairly quickly, and you access in the ore, the first level down 30 meters from surface, probably month 5 or something like that. So, this is a pretty rapid build-up into first production.
So humour me on this one. If you're only 30 metres down, why are you not open pitting?
Because these bodies are quite narrow and they're extensive. They're the so-called kimberlite dikes, and they go down many, many hundreds of meters. So the strip ratio would be, not efficient, let's say that. It's much more efficient and safer to go underground from the very beginning, and stope mine from essentially the start of the project. So that's the way we've chosen to do this.
And then what sort of mining method are you using? Because we're used to sort of kimberlite being block caved. Is that your plan?
Yeah, it's a pretty similar technique. It's what we call stoping. So your tunnel's going to go down, the ore body is parallel to that, and then you'll basically cut across into the ore body, drop it down through a shrinkage stope, and that's drawn out and then loaded onto trucks and out through the tunnel to the processing plant.
And then talk to me about the plant, because all plants are not the same, and some plants are made bespoke for certain mines.
Yeah.
And how confident are you that you can take what is effectively a second-hand plant,
yeah,
put it on top of your kimberlite, and that it'll work?
Yeah, that's right. I mean, this is a production plant in its own right, but it's mothballed at the moment. It's been superseded by a larger plant by Octare Mining on their other project. So we've got an opportunity to use this plant now. Look, it needs a bit of work. We've got a $3 million budget to basically refurb that, but frankly, most of that money is going towards what we call the back end, where your diamonds are recovered, where you need the top security and proper efficiencies of recovering your stones. So the major part of the budget goes towards diamond recovery and security.
Okay, so can you describe the plant for us? I mean, usually there are pans, there are cyclones, there are...
Yeah, it's a traditional diamond plant, if I can say that. It's got primary, secondary crushers, scrubbers, ends up in a DMS, and then from the DMS, dense media separation, the sort of concentrated product goes to the X-ray recovery house.
How do you decide on your grinding size? Because the thing is, you don't want to grind up the big stones. Is it? Oh, I suppose I could broaden that question to the whole size, frequency, distribution.
You could.
Because
we haven't got all day. Yeah.
What you want, you need the big conkers, don't you?
That's right. I mean, you're obviously going to set your primary crusher to a certain aperture, if you like, of where you're confident that you're not going to break the big conkers, as you call them. We hope they're there. The current crushing size that we've got would recover anything, I think, 150 carats and below. So, you know, if you get a stone over 100 carats, it should be safe.
You're happy. How confident can you be, given your exploration work? And the thing about exploring for diamonds in kimberlites is you drill all these holes, and by and large you don't intersect diamonds, do you? So you have to sort of extrapolate from what you can see. Micro diamonds you quite often intersect, but you know, a whole diamond.
Yeah, we're very confident of the resource. There's 4.5 million carats drilled out already. We've done combined 66,000 meters of drilling. That's a lot of drilling. And in addition, we've done about 10,000 carats of what we call bulk sampling. So that's actually mining the ore from surface as trenches from various areas. And 10,000 carats gives you a very robust statistical model for your diamond pricing model. So, you know, we've sold those diamonds, we know what the market is for those diamonds, but actually...
What was the price per carat?
The price per carat was averaging between $200 and $300 US per carat.
Which is a very good price.
It's a very good price, and the grades, let's not forget the grades, the grading up to 2.6 carats per ton. I mean, which is super high grade. And combine that with a high diamond value, you've got a very rich dollar per ton of rock, which itself lends itself to basically a very high margin of operation.
Can you tell us the largest diamond in those 10,000 carats?
I think it was 20-something, figure off by hand, but it was a reasonable size diamond.
It was a good size rough diamond.
Yeah.
And clarity, colour, all of those.
Well, the beauty about Sierra Leone is it's renowned for top quality, clarity, what we call collection goods, DEFG colours. You know, the stuff that goes into the nice jewellery. So it's blessed.
A is the clearest, isn't it? But A doesn't really exist.
A
doesn't exist, so you really start
at D.
That's
just a nothing, yeah. So a D flawless, and you know we've seen D coloured stones in our product. So you know it's a very, very nice product. Won't have a problem selling in the market.
Okay, and that gives you confidence that those greater than 100 carat stones are there?
Well, that's a statistical game, isn't it? But just up the road, actually, in Koidu, the place just to the north of us, 700 carat stone was found, picked up off the floor by a local digger. So we know that the big stones are in Sierra Leone. I think the biggest stone was almost 1,000 carats, but that was in the 70s.
Was that the Star of Sierra Leone, which is worth looking up actually, because if big stones interest you, then that was you know,
polished and manufactured by Harry Winston. But yeah, beautiful stone. So you know you do get these large stones in Sierra Leone, but for our particular area, it's just typified by high grade and very high quality, nice diamonds.
I mean, actually, when you're talking, you talk about 1,000 carats, you're actually talking about ounces, aren't you? I mean, this is a stone that weighs several ounces.
It's like a chicken's egg, yeah. It's something to behold, I'm sure.
And then how are you selling? Because of course, you know, it all used to go through the central selling organisations, and you know,
no longer. Yeah.
No longer, absolutely. So how do you bring your stones to market?
We will bring them to market through the Kimberley process. You export them in Sierra Leone, from Sierra Leone rather, pay your taxes and royalties there, and typically they'll go to Antwerp. That's been the traditional market for good quality stones, and I don't see that changing in the foreseeable future. So we will market by tender, online auction. Haven't quite decided yet, but this will be the typical process that we follow.
You're not. Are you going for that sort of site thing that De Beers used? Well, it still does have actually, where you have your packet of stones.
We'll call them tenders.
In a cleverly folded envelope.
I mean, the current financial model has, I think it's 4 tenders per year, every quarter basically. So that gives you sufficient volume to get a following and the footfall basically through the doors to see, what would be probably 40,000 carats of good quality stones, and that's how you get a following.
And does that put you in direct competition with De Beers?
No, I mean we're.
Do I go to De Beers site or
we're
do
a
I
drop
go to
in
the
the
Stella?
ocean? But I think what we will establish is a following for our diamonds, because there's not much product coming out of Sierra Leone. Koidu mine will produce maybe 500,000 carats per year. Alluvials maybe another 100, 200,000. It's a rare product, but it's a beautiful quality, and historically from the 50s up to present, this product is very much in demand.
Is it a problem that West Africa has a few years ago was known for the blood diamond phenomenon?
Yeah.
Is that a problem that potentially faces you?
It's not a problem, but it's a reputational issue that still sticks, if I'm honest with you, because you can talk to certain people and say, oh, we're about blood diamonds. My argument to that is, look, the Civil War finished in 2002. Since that time, there's been free and fair elections, I think 4 of them in the country, and the country is fully signed up member to the Kimberley process system. So all our diamonds, and all diamonds coming out of Sierra Leone, are authenticated from being from conflict-free zones, I might add. Yeah.
And in terms of actual prices at the moment, it's always a little bit opaque what's happening with diamond prices, but what's your impression of where they are and where they're going?
It's typically been a year of 2 halves. I think the first half of the year was fairly strong. De Beers and Alros are the custodians of the sector. Sold down their inventory, and that was taken into the market. Prices went up about, whoever you listen to, 3 or 5%. I think going forward, we're probably in for a bit of flatness or maybe a slight decline in prices, if I'm being perfectly honest, because the mid-sector, the manufacturers, there's some issues in that sort of midstream, if you like, a couple of bankruptcies. It sends a bit of fear into the market a little bit and stops buying. But I think near-termism for our and any diamond project is the wrong thing to look at. You want to really look at the long term, because for us, we've got a 20-year life of mine. Yes, it's important to look at the market of today, but we want to know what the market's doing in the next 5, 10 plus years. And I think the outlook is very, very strong in terms of the supply-demand fundamentals.
Excellent. On that note, Karl, I'm afraid that's all we've got time for, but thank you very much indeed, ladies and gentlemen. Karl Smithson, the Chief Executive Officer of Stellar Diamonds. I'm afraid that's all we've got time for, but join us next week where we'll be bringing you more such companies with more such opportunities, as well as being forever, of course, diamonds are also, as is very well known, a girl's best friend. I'm afraid that's all we've got time for. I'm Charlie Gibson, signing off for the Mining Show, brought to you by Blytheway on Core Finance. In the meantime, until next week, you have a capital day.